Was PMF found before Shark Tank?
100 crores of personal wealth being created by one founder is a life-changing money. No product, no prototype. The brand name was a placeholder. We raised about 2 odd crores in that round.
Unit economics of a new dental care brand like Perfora. Can you just break it down for me?
From that lens, we're almost 4x of basic Colgate. Sharks are good people. They don't bite, they don't eat you.
As of today, would you sell Perfora?
If you ask me today, the answer is
This is the first episode, and we're very, very glad to have you here.
thank you so much, Hari, for inviting me. The pleasure is all mine.
I actually want to start a little before Perfora. Okay.
Sure.
Early 20s. What is Jatan up to, and what does he do?
So I think one of the things that someone told me, right, someone that I really admire even to date, that optimize for experiences. Don't optimize for, financial gains. Don't optimize for compensation, right? Spend like first half of your 20s or, even the entire 20s just optimizing on your experiences, because that'll shape you. That'll really make you ready for your 30s and what you really want to accomplish in your life, right? So Jatan in early 20s was just trying to figure out where is the maximum value that I can extract. What are the new things that I can learn? What are the new things that I can pick up? And I worked for an EY. I worked at EY for a year or so, moved out, joined a very early stage startup as part of their founding team, did that for a while. Then that was in the real estate hospitality domain. Then I realized that real estate is not as much fun as I thought it to be. Switched gears again to join an even early stage startup, which was pre-product, pre-revenue, as the first guy on board. That was a consumer packaged goods company, right? They were trying to sort of modernize Ayurveda. Did that for 3 years, learned a lot. Because I was an early team member, I really got to learn different parts of the business, right? Like whether it's the back end, the front end, the ops, supply chain, marketing, revenue. So very well-rounded exposure. And I think that's where I really learned what I want to do, what I like doing, where I feel that I'm also having good time at, working at that particular thing or in that particular domain. So I think most of my 20s I've spent just optimizing on experiences and picking up skills that I can. Because when you study BCom honors, you're by and large a generalist, right? You don't know anything. You're not a specialist at anything. So I think that's what I did.
Optimize for experiences, not financial gains.
Yeah.
Your early 20s. Is there a framework you're using to
Yeah.
like this idea can be a starter?
The framework that we had once we sort of, scribbled a few ideas. One, is the market large enough, right? Second, is the solution that we're going to propose, is that an everyday solution, everyday consumption, or is that a one-off consumption, right? Third was, whatever solution we are going to bring to the table, is that already being consumed in some other form, or is this going to be, a process where we are going to make the consumers aware that this is a solution that exists, so you should start adapting to this solution. Fourth was, what is the kind of innovation that has happened in that particular category or the product solution that you're thinking of bringing in the market, right? Is it very high on innovation in the recency effect, or is it very low on innovation, right? So I think these were like the larger buckets where each and every idea would be sort of filtered, and then we would decide whether it is making sense, not making sense. And then fifth would also look at, by and large, what is the competition landscape, do we really have an opportunity to win? Do we not have an opportunity to win?
Is it fair to say that you're looking at volume here? Like you're just looking to put down. Nobody has a bad idea in the room at that point. Like it is just what if and where your imagination takes you. Is that how you were sort of tackling it?
Yeah, but we were also very, very clear, at least in the beginning, that we want to operate in a large market, right? Because we had, and I had seen this personally at one of the other companies that I worked with, that you can have a great solution, you can be a great entrepreneur, you can build a good team, but if the market is not large enough, right, the incentive to build that company for the long run, I feel that it keeps on diminishing, right? So we wanted to be very sure that the market should be big enough for a new player to go out there, and even if we have to do, product awareness or consumer awareness, there should be enough upside in the long run, right? But if the market is small, the upside is really small, right? Then you have to really depend on macro tailwinds for that market to blow up, right? Which unfortunately, I feel no one controls, right? Those are some external factors that are beyond your control. So I think that was a very important criteria for us, that it has to be a big market.
So your first 100 or 1,000 customers, right? That's critical to every brand.
Yeah.
Can you tell me a little more about, do you remember who they were, how you got them, any stories that you can tell us?
So first about 250 odd customers were completely organic, not via paid marketing. What we had done was, like, a few people were aware in my network, in Tisha's network, that we are sort of in the process of launching this brand. So some of the early customers were people in our network, friends, family, first degree network, second degree network. Second, I try and be a little bit active on LinkedIn, right? Because I feel there's a bit of an audience there that I have, right? So I try and sort of put out an update. When we launched, I did the same. So a few orders came in from that as a updates or a visibility source, right? And a few orders or a few customers were acquired with the Instagram pre-launch hype and the launch hype that we were building, right? So when we launched with a product video, and before that we were sort of building the narrative for 15 odd days, right? So some of those guys were sort of engaged and really wanted to buy the product, etc. And then there was word of mouth, right? So people bought it and they were like, wow, this looks really interesting, like, and recommended it to another family member or a friend of theirs. I bought this product, you should try it out, you should check it out as well. So those were the first 250 odd customers. From there on, we started sort of advertising and putting money behind performance marketing, Meta ads, Google ads, etc. And then, people started buying, ordering products, right? But I do have visibility on the first, like, 0 to 250 customers, which happened for us in about 15 days time period. We launched with a very unique concept of pre-order, which was not the case earlier in India. And like, we didn't have product in our warehouse, but we said that, okay, hey, if you pre-order, you have an option to personalize your toothbrush, right? So that as a hook, that as an incentive really worked, and people were more than happy to sort of pay for the product upfront and wait for 15 odd days till they receive the delivery of the product.
That's such an interesting way to tackle product ready, right? And you introduce a sense of coolness within that. Unit economics of a new dental care brand like Perfora. Can you just break it down for me?
Sure. So if we consider 100 rupees as the net revenue is revenue without tax, right? Everything is excluded on top of it. The cost of goods sold for us is about 40%. So 40% is COGS. Another 30% is marketing, performance marketing usually. That totals up to 70%. Another 15% is operational expenses like warehousing, shipping the orders, packing those orders, storing the products, etc., etc. And the rest comes below, which is anything related to admin expenses, legal expenses, brand marketing that you want to do, etc., etc. And eventually, for a company like us or a company like ours, we are EBITDA negative today because we're trying to sort of compete with the larger brands and trying to get more market share. But hopefully, over the next couple of years, we'll be turning EBITDA positive, EBITDA break even, because we would have acquired enough number of users that the cost of marketing will go down, the cost of selling the goods will go down, because there will be more economies of scale.
And do you have a date to that, saying by this date we want to be EBITDA positive?
I think by end of FY27, right, which is couple of years from now, we're looking at EBITDA break even.
Okay. And is that different from, say, when you started, what you thought it would be versus are you earlier?
Honestly, when we started, we were very naive. So we didn't really have any idea about a lot of these terms. And even if we had idea about these terms, we didn't really have any comfort on, when are we going to achieve that, accomplish that, at what scale, etc. Right? Because there's a lot of euphoria, there's a lot of excitement, there's a lot of naivety, and you're just going with the flow. Let's do this. So
yeah. That's awesome. I mean, I think that's the difference between a seasoned entrepreneur versus, somebody at the beginning of the journey, right? Like, reality checks hit hard
later, and they hit later.
I just want to touch upon this because we're talking numbers, but pricing, right? Like, I feel like you're about 2.5x more expensive than, say, a Colgate, for example.
So the basic Colgate, the Colgate dental cream starts at 50 paisa per gram. which essentially means that you can get a 100-gram toothpaste for 50 rupees. Our toothpaste on average today is priced at about 100 grams for about 180 odd rupees, right? So from that lens, we're almost 4x of basic Colgate, right? But we're not competing with basic Colgate.
Right.
That's the reality of it, because we're competing with a evolved audience, an audience that is using a Colgate Total or a Colgate Visible White or a Colgate Sensitive or a Sensodyne, etc. From those products, depending on which product do we take as a benchmark, we are about at 30% premium, right? So
Interesting.
if those products are 100 grams 140 odd rupees, we are 100 grams 180 odd rupees. All right. We've launched more products, we've launched more toothpaste, we've sort of reduced our pricing a bit to scale the business. We've done all those interventions. We've learned from the feedback that we're getting from the market. So yeah, all of that has happened. But what I can share is framework, right? How to think about pricing and how do we think about our pricing as well. One, you look at your COGS, right? And you sort of do a markup on it, which will sort of, and you do a markup thinking or based on, this is the cost of marketing, cost of acquiring a user. These are fulfillment operational expenses. These are admin expenses, and covering all those expenses, there has to be a certain product cost that gets baked in. And are you making, is there any margin left for you to make money or not, right? That's one. And you take estimates based on what's happening already in the business. If you're starting new, you'll take certain assumptions, right? Like, for example, it is fair to assume that at least if I was conservative, I would say 60% will be my cost of acquiring a user in the early days, right? 20% will be my operational expenses, warehousing, fulfillment, logistics. Another 15% would be my, admin expenses, office expenses, etc. So that's 80 plus 15, 95. So I have to price, like, the COGS has to be 10 odd percent or less than 10% for me to say make some money, right? I have to, if I'm making a product for 100 rupees, I have to sell that product at 800 odd rupees, right? Something on those lines. That's one way to do it. Second way to do it is, you look at where the category is, what is the average category pricing. You can do that comparison by running a couple of, analysis on Amazon. There are enough and more tools, and you get a category level average pricing based on the per grammage, per SKU size, and you say, okay, hey, this is my product, this is XYZ, these are XYZ reasons my product is better, and I can charge an X% premium, right? And third is that you look at an amalgamation of two, right? Where either if your cost of products is very high and it is not meeting with the industry benchmark even after 20-30% premium, either you sort of start dialing the cost down or you say that I'll charge a certain premium because that is what the hard reality is, right? What we've done, and the another approach that we take, which happens in cases which has also happened with us, is when there is no market that exists for that particular product, right? In that case, you have to sort of bake in the cost of building product awareness, category awareness, which is usually 15-20% of the overall revenue that you would be getting, right? So you have to bake that in your pricing and price your product accordingly. If the second method does not exist, right, because there's no category or there's no benchmark, right, then you sort of bake in the product awareness price or the expense that you'll incur to create that awareness, and you price your product accordingly.
Got it.
But to give you a sense, in personal care, the pricing metrics are usually anywhere between 3 to 6x, depending upon what kind of brand you're building, what is the user proposition like. So you can have the product COGS at 100 rupees and you can sell it for 300 rupees, and you can have it at 100 rupees and you can sell it for 600 rupees.
Interesting. Correct me if I'm wrong, but the one big influx in your journey was the Shark Tank moment, right?
Yeah.
So my question is, was PMF found before Shark Tank, or would you say that maybe after is when you just like, now there's strong PMF?
I feel we found PMF after Shark Tank, not before Shark Tank. I also feel in my head that, the definition of PMF is very subjective. That is one. Of course, you can always put certain metrics to it. But if you're thinking about PMF, right, are you saying that if 100 people have tried your product and 70 people rave about it and love it? Or are we saying let 10,000 people try your product and 4,000 of that number of the 10,000, which is 40%, love the product, rave about it, etc., appreciate it, right? In my head, it's always been the latter, that PMF has to have a certain scale for you to evaluate, to really say, and even eliminate the bias, right? Because 100 is a small number. A lot of people can be friends, family, first degree network, second degree network, etc. 10,000 you would not know, right? So in our case, I feel that we found PMF after Shark Tank. Before Shark Tank, we were doing things. We were sort of at it. We were trying to understand the consumers. We were trying to sort of uh, nail the problem, fix the gaps that consumers were pointing out, customers were pointing out, that exist in our products, in our solutions, etc. But I think 2-3 months after Shark Tank, when we had a large enough customer base and we started looking at data in a more granular manner, right? Product wise data, product wise cohorts, is when we knew that we have found PMF, not for all the products, but for certain products, right? Because like I said, PMF at a company level is also, I feel, it's very vague, right? It has to be a product level, and that's why it's called product market fit. It's not called brand market fit or company level fit, right? So yeah, I think some of the products found PMF after Shark Tank.
Got it. Who backed you first? Can you tell me a bit about that entire closing?
Yeah, I think so. We were like early on, we were still thinking whether we want to raise capital or not. I had different thoughts. Tushar had different thoughts. But one thing that was very clear to both of us, that we want to build a large company, we want to build a large brand. You would not buy a no-name toothpaste or a no-name toothbrush, right? You'll always buy a branded toothpaste or a toothbrush from a large brand that's advertising for so many years, right? So we knew that to build a brand in this category, we'll need money, more money than what we have in our bank account. So hence we started speaking to a couple of investors. One of the reasons why we were speaking to investors, because a little bit of VC world that I understood was, one, VCs invest based on certain trends and certain theses, right? So one of the reasons why we were having a conversation with them was to tell that, okay, hey, that let a bunch of guys, that's me and Tushar, are thinking of doing something in this category. This category you might not have actively thought about, but think. Tomorrow it might become interesting, and when you start thinking that this is now becoming part of your thesis, you can always reach out to us. That is one. Second, we also wanted to get a feeler of, when we pitch to these VCs, what are they saying, right? What is their feedback? Like, are they like, okay, this looks very interesting, this will not work, right? There are certain gaps in your thought process, there are certain gaps in your business plan, etc. So that is another reason that we were speaking. And third was, like literally no expectation, but if we get money, we'll take it, right? So we spoke, like the first investor that we got on board, there's a VC fund called Sauce.vc, right? So they put in money, and it is a very quick process. I wrote to them, I still remember, because Holi is just like last weekend. I remember back in 2021, I think Holi was on a Monday, and I wrote to the managing partner, cold email on a Sunday afternoon saying, this is what we're doing. We would love to sort of speak to you if this is of your interest. Then that person, his name is Manu Chandra, he ended up replying on that email, and there was like 10 email exchanges on the very same day on a bunch of things, etc. We got on a call the following Tuesday, and in the following week we had a term sheet. So very, very quick, because there's nothing to due diligence. There's only an idea and a bunch of people, right? What you can do is you can do a ref check, which they did, and yep, that's about it.
Do you mind telling that amount? What did you raise first?
Yeah, we raised about, that's public news, so we raised about 2 odd crores in that round. So
this is just an idea.
Just on an idea, just on a piece of paper, no product, no prototype, no brand. The brand name was a placeholder.
What is it like to work with the sharks?
Sharks are good people. They don't bite, they don't eat you. They eat a bit of your company when they invest, and they get equity in return, which is a fair transaction. But like in our experience, they've been very, very helpful. They've been very accessible. If I call up any of our investors from Shark Tank, even if they don't answer the call right away, they'll make sure that they're texting or calling me back in a few hours time, or probably at the most in a day's timeline, right? Of course, you can pick up their brains every now and then on areas that you feel where you need help. And that's what we do as well. But fairly been a very, very good experience, very positive experience. Our engagement is not very high because we have so many other things to do and so many other investors and stakeholders to manage. But yes, by and large, our experience has been that they can help you out if you go with some very pointed questions. But if you go with a question like, for example, how do I grow my company? That's a very large problem statement, right? And then you can't expect the shark to say, okay, hey, let me first study the data. Let me first go do this, right? They don't have so much time because they're also in the busy running their own business, right? Busy building their own business and empires, etc. So if you go with a pointed question like, I want to solve this, or I want your thoughts, feedback on XYZ thing, which is very pointed and very structured, I think that's always been very, very helpful.
Fundraising versus bootstrapping. I just want you to sort of give us an idea of how do you know which route to go as a founder?
How do you know which route to go? I think it is directly correlated to two things. One is your ambition with the company and in the time frame that you want to achieve and accomplish that ambition. And second is on the idea that you're pursuing, whether that idea is investable or not. A idea that is not investable doesn't imply it's not a good idea or a great idea. It is just not meant from an investment standpoint, right? Because VCs typically have a time frame of 7 to 10 years and they have to make a fairly good amount of return in that 7 to 10 year time period for them to justify the return to their investors, which is limited partners, LPs, etc. So I think these are the only two ways you can decide whether to bootstrap or whether to fundraise. You know, that's how we also went because we had a certain ambition, we had a certain timeline. We looked at our category, we looked at that we will need money sooner or later. If it is coming sooner, then let's just take it and move forward. Maybe, if in the future, 10, 15, 20, 30 years down the line, if I do another business and I feel that business is not investable or I don't need or I don't have a certain time frame in mind or I don't have a certain ambition in mind with that business, I might not take VC money. Third, another factor that I would like to add on is, the choice of running the business and the lifestyle that you want to have, whether to raise money or not, right? Because when you raise money, principally you are answerable, right? Principally you are accountable. You have to return that money in some form or shape at some point in time, right? So your thought process is very different. When you're bootstrapping, it's your money, it's your company, 100%. You can do things as you want to, at your own speed, at your own discretion, which is not there when you raise VC money or investor money for that matter. So I think that is a choice that a founder also has to make on what is the kind of lifestyle, operational life he or she wants to live while building that company.
5 things you wish you knew before building a D2C brand.
5 things that I wish I knew. One, it'll take more money than I could have imagined to build the brand and the company. It does take a lot more time than we think in our head to build the brand. Third, gross margins are very, very important. That is where everything flows down from, like it's top to down. So if you don't have a good gross margin, that means fundamentally you're not building a very good business. Fourth would be, sometimes customer love is not visible in data. You have to look for other indicators. And there could be like, for example, you buy something from a website, but you don't ever repeat on my website, but you're buying from other platforms like Blinkit and Amazon, but you love the brand and love the product, right? So there are different ways that you have to find the customer love and customer repeat exist. And fifth would be that brand marketing and brand spends are not measurable, right? You do it and you sleep with those spends, hoping that it'll turn out to be good. So yeah, those are 5 things.
Oh man, the last one, the brand marketing is not measurable is such a it's such a beautiful one to hear from a founder because I keep getting that question of how can we measure this, and I was just like, you pray. That's how you measure it. As of today, would you sell Perfora? Number one. And follow-up is, if you answer yes, then at what money?
Got it. So can I give, like, I can always give a binary answer, yes or no, but I want to share more about the first question, right? I feel if you ask me today, the answer is no. But if you ask me 2 years down the line, the answer might be yes. And personally, this is a question that after Shark Tank, multiple people have asked me. This has become a common question in certain type of conversations. The honest answer, or the way I think about it, is like there are two three parameters. One, where am I in my life from a financial standpoint, right? Am I financially secure? Am I financially not secure? Second, what is the offer on the table? Is it an offer too good to be true, and that you feel that this, if I don't take it, I might be losing out on a lifetime opportunity? Third, where are you in your head in terms of, like, after doing or building a company for X number of years, it's okay to be feeling a little burnt out, and it's also absolutely fine if you're not feeling burnt out, right? There are times when a founder for a couple of months feels burned out, and if the offer is on the table at that moment, you might want to give in and say, okay, let me hang up my boots and I'll do something else with my life, I'll figure it out, right? But there could also be a mental state where you're like, bro, the game is just starting, things are just starting to look positive, I am not giving this up, right? Irrespective of money on the table. So that will also play a lot while deciding whether you will sell it or you will not sell it, right? I think these are these are three larger criteria, filters, parameters, whatever you might call it, on what will help me decide whether I want to give in or whether I don't want to give in, right?
And is there a too good to be true number today, or should I ask you 2 years down the line?
I think whatever number I say today will be different from the number I say 2 years down the line.
True.
That is one. But what I feel, 100 crores of personal wealth being created by one person, one founder, is a life-changing money. Like, you can spend and do a lot with that money. So based on what my equity holding in the company when that offer comes, and if I'm able to make 100 crores, I think that's a great outcome personally, right? But whenever we have to decide that, we also have to look at what is the outcome that our investors are getting, what is the outcome that our shareholders are getting, who've invested in the company over a period of time. Are they making enough return or not, right? So
I love the clarity of thought of this answer. It's amazing. Awesome. Before I let you go, one last question, right? Unsolicited life advice from a founder. Okay, if you had to give 3 sets of people, and I'll tell you the 3 sets one by one, maybe. The first one is a student preparing for CAT.
a student preparing for CAT, I would say, go for it. Try your luck.
Unsolicited life advice from a founder for 16-year-old Jatan.
Things will happen. Keep faith in yourself. Play the long game.
Oh, wow. Beautiful. Unsolicited life advice for today's Jatan.
Don't give up. Things will be brighter a few years down the line. There's light at the end of the tunnel.
Wow. I think that's a beautiful note to end on. Thank you so much for being part of this chat. This was super, super insightful.
Thank you, Hari, for inviting me.